now? Why are home prices stabilizing now after more than a year of slowing? Is it linked to the 3 interest rate cuts we got this year?
Well, I think it would be logical to suppose that the Fed is signaling expansionist policy, and that would promote home price increases. I have to say, though, that we said that the numbers were encouraging or reassuring, but in fact, they aren't much different from the past several years. The housing market did very well between 2012 and 2015 or so, going up at double-digit in percentages. But now it's down to, for our national index, down to 3.2% for the last year. So it's healthy, it's okay, but it's not exciting. And I don't think people are as excited as they were years ago in the housing market.
So, well, Professor, speaking of that, I mean, we just had a chart on the screen that showed the trajectory of home sales going all the way back to 2008, 2007, prior to the financial crisis. And one thing the chart shows is we never quite fully recovered in terms of getting back to the levels where we were prior to that. When you look at, I guess, the effort that the Fed has made over the past 10, 11, 12 years to sort of get this economy back on track, you look at the past 3 rate cuts this year, do you think the Fed has done enough to ensure that the economy isn't going to slide back into not necessarily as bad as we were during the last recession, but something worse than where we are now?
Well, yeah, the recession is a little bit, we thought we were going into a recession with the inverted yield curve a while back, or a lot of people thought that, but it hasn't really happened. We still are doing all right. I think these things are inherently hard to predict. And we're not in a boom period in terms of prices in real estate by any means. So it's not driving like it was before the last recession. That enthusiasm suddenly turned. Maybe I prefer having the kind of stable level of modest enthusiasm that we have now. Whether we'll have a recession is a big if. It depends, according to my new book, Narrative Economics, it depends on how the narratives change and how our ideas change. And that's very hard to predict.
Yeah, because that can come out pretty quickly and go viral pretty quickly. And narrative economics, you're really talking about ideas that spread by word of mouth, by social media, that drive our behavior and drive the larger economy. Right now, Professor Shiller, what is the single most significant economic narrative out there that has you concerned?
Well, there's a lot of them out there. If you ask for the single most prominent, it would have to be the impeachment hearings, right? And our president. What that means, though, for a recession is ambiguous. I think the instability that we see by the polarization in politics does diminish business somewhat. It makes it hard to plan. It makes people feel that this isn't the optimal time. But it hasn't affected us that much. So it's like we're preoccupied with the impeachment hearings, and we're postponing some important decisions in business until a later day.
And is that later day, is that November 2020? Does it change all of a sudden then?
It can change pretty fast, but between now, November 2020 is only 1 year away. So I think it's quite possible that we will make it through November 2020 without any recession. Right. And that would be good for Trump. But it could, it could. I just don't think we understand these things well enough to say that it won't happen.